Jeff, it raises a question, right? So these deals keep getting bigger and bigger. Here's a big one in tech.
Right.
Did the two need to make this deal?
I think they did because they're under a lot of pressure from their customers. So their customers are the phone makers, the Samsung types, to lower the cost of chips. And neither one was quite big enough or didn't quite have the scale of, say, a Qualcomm, the kind of company they would compete with, to really, use that size to shrink the cost of manufacturing and designing the chips, which aren't the sexiest part of the business. We're all focused on the Googles and the Yahoos and the Microsofts. But, there's a lot of cost that goes into building these products.
Speaking of Qualcomm, Stacy Rasgon, an analyst at Sanford C. Bernstein, was on with me and Olivia. Last hour we were talking about what the next leg of the chip industry consolidation will be, and will Qualcomm be the one that now needs to step it up and make an acquisition? And he said, yes, Qualcomm probably does need to do something transformative. The question is, what would it buy now?
Right, exactly. There are a lot of companies between 1 and 5 to 10 that they could pick up.
That's not transformative. That's not,
right, exactly. It's not transformative. So it remains to be seen if they're gonna do anything. We are definitely in the era, whether we're talking about the chip makers or cable companies or what have you. We're in the era where we're seeing some of the biggest deals in each industry right now. Consumer products with the Heinz buying Kraft a little while ago. You're just seeing big 30, 40, $50 billion deals in every industry. It seems like every other week.
Is Broadcom getting taken out going to be a catalyst for Intel to finally step up and pay what Altera wants?
It could be. The talks right now aren't going on, as we understand, but they were pretty close a couple weeks ago when they had their negotiations. They were at like 54 a share, so we do think those talks could come back on it at some point.
And Jeff, getting back to this whole broader M&A environment and whether or not now first we saw companies that really needed to make deals.
Right.
Then we're kind of seeing companies maybe that are kind of need to do it. At least this is a way that they're gonna boost their share price. I thought it was interesting. Alex Ghana, an analyst at JMP Securities, a really interesting quote coming from Alex here. He said, quote, "I've got my misgivings. This feels very frothy for me. This seems like a stretch, like it has a touch of recklessness to it. It seems like a bridge too far to me."
We've heard that from a couple analysts. We quoted him, obviously, in our story. We heard from another who said, listen, Broadcom is kind of slowing, or their growth isn't going as fast as it was, and now you're paying at a premium beyond its stock price, which was at like a 9 or 10-year high as well. I think there is some concern. People are asking, are we at a bubble, especially in the tech space? People aren't asking that in oil and gas, obviously, or cable companies or consumer products or what have you. But in the tech space, I think people are starting to get a little worried. This is the biggest tech deal ever. It's kind of surprising when you think of it. Once you discount AOL, or not discount, or look at AOL as more of a media deal 10 years ago. This is the biggest one. When you look at HP and Compaq, you look at First Data when they got taken out, Dell going private. Biggest deal ever in tech.
Jeff, what does it mean that we're seeing increasingly stock used in these large deals, either entirely or in combination with cash? Because for so long it was all cash, that's all people wanted.
Right.
Now all of a sudden stock is back on the menu.
It's back on the menu because their shares are way up. And usually the company they're buying is also a public company, so it's going to cost you more. So you need to put some of your stock in. And it also gets shareholders on the other side who might be a little skeptical. They're going to support the deal because they're going to get a piece of your company or a piece of the combined company.
Right, but they weren't feeling quite so optimistic about the prospects for growth, right, during the post-financial crisis years.
Right.
Is this an indication, if you will, that perhaps the M&A boom has some legs to it now that stock seems to be a more viable currency?
It feels like we're in the middle third, if you will, of this. We're in the 4th, 5th, 6th kind of range, I think. I mean, this is going to run for the rest of this year, probably going to run into next year. We're ahead of last year. Last year was a record year since Lehman went down, and now we're ahead of last year. And we've seen these huge deals. Charter, I mean, just 2 days ago, Charter did a $55 billion deal. I mean, so we are just seeing like
Royal Dutch
PG, and I mentioned Kraft, and we're waiting to see if Monsanto is going to make another run at Syngenta. That's a $50-something billion deal. So there's a lot on the table that people think either has happened or people think will happen, in the next couple weeks.
Happen,
Jeff, thanks for coming.
My pleasure.
Good to see you. Bloomberg's Jeff McCracken, everybody.